In sports-mad countries like Australia and New Zealand, everyone is competitive and everything is a competition. In this vein, we compare residential markets across different Australian states with New Zealand added for good measure to see how they're performing, so we can get a good sense of where they are headed over the next year. The Perth housing market, unlike their middle-of-the-road footy teams, has been the standout performer over the past year, still being lifted by a lot of mining wealth in the system. Annual price growth has slowed from the booming mid-20s to the more respectable low teens. In our view, Perth will likely remain near the top of the pack over the next year. Brisbane has really cleaned up on the sporting field in the past year. Premierships, flags, you name it, it is sitting on a trophy cabinet somewhere in Queensland. The local housing market has also performed well. Annual price growth is still running strongly across southeast Queensland, well supported by sun-seeking migrants. The Olympics build-out will add a lot of fuel to the fire for several years to come, increasing housing demand while diverting building capacity. Sydney remains well entrenched in the middle of the pack, both on and off the sporting field. In the housing market, we continue to see modest single-digit price growth. Affordability constraints are starting to become more apparent in Sydney, especially for the larger and very expensive standalone houses. A housing shortage in Sydney is holding up the market, at least until we see more supply coming through. Melbourne has been a cellar dweller for the past 2 years, at least for residential price growth, due to higher state taxes and weaker buyer sentiment. In late 2025, that modest price correction is finally giving way to a gradual price recovery, with lower mortgage rates the key catalyst to that turnaround. It will be a long road back for Melbourne as a slow recovery takes hold through 2026. Auckland has had a challenging time over the past year, with the residential market weighed down by a double-dip slowdown and much weaker population growth. Sharper rate cuts in 2025 will provide a basis for a turnaround in 2026, although more subdued demand will be the key hurdle to overcome. Much like Melbourne, it will be a slow road back for Auckland over the next year. Over the past year, the larger capitals like Sydney and Melbourne have underperformed in terms of price growth, as the other capital cities like Perth, Adelaide and Brisbane posted more robust price gains. Over the next year, we certainly expect the gap to be a little bit closer across the major capital cities, partly with Perth moderating and Melbourne rebounding. However, the ordering of these markets and the relativity in price growth are likely to be quite similar over the next year.